And that's for you options players. I used to do that all the time when I traded options. Wait for it to hit those lows or those highs and take that play to the opposite side. Because you'll know if we're going to break out, the body of the candle will close above it like it did at the end of the market. I mean, below it.
Oh,
No, appreciate it. That's
got you.
we're gonna jump into Joseph, guys. Joseph got something to show us, and I'm ready.
You.
He be having some good stuff too. We all be having a lot of gems here and there. So we was talking about interactive learning last week.
No more than the camera.
Doing it now, but he gonna share his screen and show us some good stuff. You there, Joseph?
Yeah, I'm here. I'm
All right,
out there.
awesome. Hold on. All right, whenever you're ready, my guy, I'm ready. I'm ready to lock in. Get your notebooks, y'all.
Hold on, I'm trying to make sure.
Oh yeah, that's a good question she just asked. Where would you have gotten out at, Sebastian?
I'm sorry, I muted myself.
Oh,
The
sorry.
high. The high. For me, I would get out at the previous high. So where the green candles were, where we fell from, I would have got out there. You can hold it as long as it'll let you keep going. But I get out when I get to equal highs. That's just how I do it. But as long as it'll let you get in that play, do your thing.
Okay.
All right, cool. Appreciate it. On you, my guy.
All right. I kind of don't even know where to start, JT. I really want to show you this fib, but I know the question is gonna go crazy if I show you this fib.
Hey, we want to see it.
I'm trying to see. Looking for a range. My bad, I got the zoom controls in the way.
So Joseph, he know a lot of market structure and stuff like that, guys. So like,
All right, so look, you see how I'm gonna just show you an example of this fib, how accurate it is before I go on anything. But you see how you got this low right here, right? And this high right here. It's a way, like at this time when you had this high and this low, none of this would have had happened yet.
Right.
So let me show you what this fib would do. You see that?
Oh
It tells you where it's gonna go. Like when you would have had this high in real time in the market, let me fix it. You had this high in real time in the market and this low, none of this would have had happened yet. So it told you like where price was gonna have resistance and where it was gonna go. Like it's bananas. It got there, it rejected it as resistance, came back above, used it as support, target the golden zone, came back, never went back above the golden zone. And then it came back down to like roughly the 50% of the range. And it works on any time frame. Like this fib is crazy. I've been messing with it for the last week or so. So I looked into it, but I didn't really start back testing it until
What is a
recent.
fib? I'm not sure what you're referring to when
Fibonacci
you're
retracement. Fibonacci retracement.
And it's kind of just like levels. You'll hear me talk about the 50% of that, and he got the 50% on this particular move. It's kind of it's almost like support and resistance. Like how I went up to that his at the very top, his orange line, that was a resistance area. It just hadn't happened yet, like he said, but it still was a resistance.
Yeah.
Is that a strategy or an indicator?
It's not an indicator, but it's a tool. You can use it within your strategy to as more confluence or more confirmation or something telling you to do or not to do something.
I heard of that before. Do you have to pay for that?
No, it's a free tool. It's on Thinkorswim as well. It's just Fibonacci retracement.
So will that be under tools?
What is that? It's under studies, JT?
Yeah. Hey, Joe, you don't mind me interrupting?
Okay, well.
Yeah, look under tools. When you look at your tools, it's going to be the Fibonacci retracement tool, and Thinkorswim is going to be under the percentage sign, is what it is. And I guess if y'all listen, basically, it's you got to know where to set your points at. You got to know where to set your highs and low points at, and at the same time, you got to learn how to set up your percentages where you want your lines at. And I don't want to overstep Joseph. I think he's going to go over all that as well. So
The thing with the fib, you just have to have the right range. Like whatever
yeah,
time frame range you're looking for, you got to make sure you got the high and the low correct. Because your levels you're gonna still get levels up there, but they may not be accurate.
Mhm.
So Joseph, this is Michelle.
Mhm.
I'm not seeing the fib with the negative 27 and the negative 61.8%.
You got
So
to
what's
set
the
it up that way.
significance? Huh?
You got to set it up that way. I set it up this way.
But what is the significance of them?
It is depending on if it's bullish or bearish. These are target areas for the continuation of the whatever prevailing trend is. Like I said, at the moment that I took this high and this low, this price action would have not happened yet, because you would have had this high and this low. It would have been drawing up. After you seen that it took over the 50% and continued and took the top of the range, you could see where price could possibly be targeting.
Oh, okay, gotcha.
Joseph, can you put the levels back up again, please?
No problem.
Take a snapshot of it. Thanks. Thank you.
You're welcome. I wanted to show some of my chart, but it's kind of messy from what I've been trading this week. All right, something similar that I be doing sometimes, depending on how, when I work, I will get certain levels, and I just use this to show me where certain level highs and lows are going into the New York session, or the session that we all trade. I will find out where the London high and the Asia high is going into the session. So today, Wednesday, I would have did something like this, and then it could be considered pre-market and post-market levels for options. So I will find these levels, and I would annotate them to where I'm aware of them, where price get here. So these are pretty much key highs and lows. And for an example, let me go. I got so much zoom stuff right here I can't see. So I would have these levels out, marked out on my chart. And like, I don't like to trade too much, because the more you trade, the more you're exposed. So just even with something simple, or just knowing where these previous session highs and lows is at, or pre-market highs and lows, I would I'm not gonna lie, I'll just mark it out how I would. Like Davon teaches us with the premium and discount. I always want to know where I'm at. And with trading. And then ultimately, I'm just waiting for one of these levels, these highs or lows, to be taken. On the 15-minute chart, I'm looking for a wick or rejection. Or on the lower time frame, I'm looking for the same thing, but I like to enter on the lower time frame to get best entries as possible. Like Sebastian was saying earlier, 9:30 is a lot of volatility. So if you don't know what you're doing, it's best to stay away from it, because you get your account beat up. And then I'm aware of today's price action today, because I was trading in it. So ultimately, when I seen this level get taken out, like, you see how it wicked through this level, I would be confident enough to take this trade. Like, I would see that this level come to get taken, and I would get in this trade. I would put my stop loss above these highs, and I'm targeting these lows. So once I see that these levels get taken, it's just simple trading. You just got to be patient to know. Be patient to not, what they say, not dibble in the middle. You waiting for a high or a low to be taken. If it get broken and it's starting to not be resistance no more for a high, you could potentially take it up as a support bounce. If you see a high get to and it start breaking down, it's the potential to take it down. Same thing with a low. If you see a low getting used as support, it's a high probability that you could take it back up. If you see it getting broke and it's starting to use it as resistance, it's a high probability you could take it back down. So like the simpler
happened?
you keep trading, the
What
better it
happened?
is for you.
You heard me?
Huh?
How? You got headphones on.
You good, Sebastian? I mean, dang, you good, Joseph? My bad.
No, but yeah, you just keep it simple as possible. And then my chart pretty clean. Like I'm able to do this with just some levels. Like, and I don't really add too much more up there. Like I might add some fair value gaps or some order blocks, market structure stuff, but I'm not using indicators. You don't see no indicators, no EMAs. I got this little indicator just marking out market structure because when I'm at work, it's hard for me to chart on my phone. And I take majority of my trades at work. So that's why I got the indicator for. But it's nothing that's telling me to take a trade or nothing like that. Even with, I'm trying to see what else. Even with like stuff like this, you see it came back to that level, took the high, but it's a higher point, it's a higher time frame point of interest right here. If you look, you can see it came market structure, like JT said, it came into a fair value gap, place where it's liquidity, and it started to fall back down. But patience will show you that it went from sweeping the high to a demand zone, and now you could have took it from the top to the bottom, and then took it right back up. I mean, the simpler your trading gonna be, the easier it is to make a trade. Like, you don't overcomplicate things. It's simple. The hardest thing you're gonna have is the patience with battling with yourself. Like, do I wait for my setup or and be patient, or do I feel like I could risk it and take a trade in between in these, unsafe waters? And I kind of forgot what I wanted to show, JT. I ain't even gonna lie to you. I know it was the fib, and dang, what else did I go over? Hold on, let me see my chart.
Mr. Joseph, are you looking at like two things that you said that's very important to the traders to hear?
Go ahead.
Playing around in the middle right there that he just showed y'all. That wick happened. If you're in the middle, that can happen to you at any point in time. If you're at the bottom, it's less likely to happen to you. If you're at the top, it's less likely to happen to you. So
Yes,
what he's
sir.
saying there, that's a very important lesson, because that wick took out probably hundreds of thousands of people's accounts
I'm about
today.
to show this candle happened in 1 minute.
Yeah.
This is an NQ futures. This is a NASDAQ futures candle. This is $130 candle.
23 seconds.
This
Yeah, also,
candle.
yeah,
Go ahead,
I'm sorry. I
No,
was
you
just gonna say
good.
that NQ is also QQQ, guys. It's just a little QQQ is a little bit slower. So
Yep.
if y'all can't look at, if you don't have a futures account, to look at QQQ, and should have the same type of candles. What he's going
Yeah,
over
it's gonna
right
be
now.
the
If
same
anybody's gonna
candles,
pick
but
this one,
the numbers over here is just gonna be different. But it's the same
yeah,
exact candles.
exactly. Sorry about that, Joe.
No, good. Well, you good. You know it ain't no biggie.
Oh yeah. And Mr. Joseph, the same thing happened over on SPY too, guys. So what's happening on QQQ also happened on SPY for you guys.
Yeah, Sebastian is right. Those tickers, SPY and QQQ, ES and NQ, they typically in sync. If one is lagging, they're waiting for the other to get back in sync with the other. So it's literally the same candles.
Speaking of in sync, if you took that trade from the middle, your account went bye, bye, bye.
Yeah, it's the same candle right here.
Joseph, I got a question.
Second.
Hear me, Joseph?
Yeah, same candle right here. This is ES. This is SPY.
Someone had a question, Mr. Cedric.
Go ahead.
I was just for your range. So basically, you don't use You don't choose your own range. You basically let the levels, the previous the levels give you the range.
Yeah, you can do that, especially if it's still inside of it. Like for today, this kind of was perfect. It consolidated all night, like they were talking about. So I used the high of the Asia session and the low of the Asia session because the London session was inside of the Asia session. So I just used that whole high. And you see, before it gave the initial move at a reasonable time in the New York session, it swept the Asia highs and then it dropped. It took the whole range pretty much.
Mm-hmm. Okay. But what if it doesn't happen like that? How do you choose your range?
Oh, you got all these candles to choose from. I'll just go to a higher time frame range. So yesterday it dropped something crazy. So a higher time frame range would be from there to there. So on a higher time frame, when price revisits somewhere in the middle, I will fib it out and just find key points. I'm looking for a reaction at the 50%. Until it gets to the 50%, I would only be looking for calls. If I'm taking shorts, it would be short lived because I know it's in what is called buy side, so it's buying up. It's buying up to these bearish points of interest, these bearish liquidity targets. Until it gets above the 50%, then it's more likely for puts to be playing out. You see, the most of the day, yeah, it was put opportunities, but majority of the day it kind of went up.
Mm-hmm. Yeah. All right. Thank you.
No problem.
Hey, Joseph,
What's
I
up?
got a quick question. Like, without you telling me, like, how do you tweak the numbers with the Fibonacci? Like, what are you looking for, like, to make them exactly to hit the levels at those percentages? You know what I'm saying?
Without wait, say that one more time. I just want to make sure I get you correct.
Yeah, like without telling me, like, how would you like put the numbers in to align with your Fibonacci? You know what I mean? When you draw your Fibonacci, you just put it in the settings. How do you get those numbers in the settings? Like what are you looking for to put those numbers in the settings? That makes sense.
They actually preset numbers because it's certain numbers that's aligned with like smart money concept, market structure stuff, and it's pretty much the opposite version. Like this, like for example, with this fib right here, this 62 and this 61.8 is pretty much the same thing, but one is a positive, one is a negative. So I'm looking for a reaction at these areas, like either let me find an example, either with the pullback or just overall. Let me see. Trying to get a good range on this 1 hour. Let me go to a different time frame.
Okay, so we don't even really got to mess with the settings, like you know what I mean? Like
Yeah, they preset. Like you could set fibs and like at least on TradingView, you could preset your fib settings. These is the current settings for this particular fib right here. And like for this other fib that I use right here, like they have different settings. That's a Fibonacci retracement as well right here. But different fibs is used for different reasons.
Yeah. No, normally if I was gonna say the Fibonacci numbers are normally like a 61.8. What Joseph did, he basically rounded up. And the reason he rounded up, I'm thinking, is just to make it a little bit simpler. Instead of having a 61.8 or what is it, 20, it's like 20 something, 30 something,
20,
32
yeah.
point something. Yeah, so all of his points. And if I'm not mistaken, Joe, I think you rounded up to the next number, right? For your levels?
Yeah, for the 61.8, I just put 62. And then
exactly.
For the other one, I just put 27.
So, I mean, you can you're able to put any numbers you want, but the fib is, I forgot the whole concept of the Fibonacci. If y'all look at Fibonacci and it goes over, the different numbers, if you times something, so many, I forgot the exact reason for it, but that's how the numbers came about. And it's like a lot of things, sorry for all the noise, guys, but basically it's something like when it gets to those numbers, I guess there's some type of algorithm or something. I don't know what it is. I can't explain the science to it. But all I know with trading, like Joe said, he said the perfect word: high probability of things reacting at these levels. And I guess when they show you guys, you can see how things go to that level, get near it, touch it, or go past it. It gives you a better, it works just like support and resistance or like pivot lines in a way as well.
Exactly.
But
And then with these negative fibs, like I said, you would take a range where you're waiting for more price action to happen. Like with this range that I just took right here, I can confirm my high and low. Yeah, my high is right here, my low is right here. Hold on 1 second. I'm trying to take this back off. When I had this high and this low, this price action right here would have not happened yet. So you would have been able to say, okay, if we break above this, I can at least target to here. And if we don't stay above here, well, if we do stay above here, I could target to here. But it's another trick with this fib. Like with this particular fib with the negative 27 and the negative 61.8, if it doesn't close, like really close back below zero, it's a high probability that it's gonna go above. And if it does close below, is a high probability that it's gonna come back within the range, closer down to this 50%. Like I could take random ranges and show you that every time that it gets to this 27 level or this 61.8, you're gonna get a price reaction, either a wick, an immediate reversal, like every time. And it's literally from this low and this high. This you would have had this happen. You'd have had this high right here, and then this low right here. I took this low because it's the overall low, and then these levels are negative levels, so they would not have happened until the price printed it up. But you can, this is like back testing the fib to see how these levels would have played out and with real price action. Even when they broke through and came back, it's still having trouble. Sorry, I'm used to using my Mac, so these controls is backwards. Every time it revisited this 27 level, it gave price trouble. So it's like you could look at it as if this was your target and you decided not to get out, it gave you a chance to get out, gave you a little extra, came back, gave you another chance to get out, came back, gave you another chance to get out. And I say it like that because in futures, if you're not in a position where you got high equity, you may not be able to afford these takebacks, these pullbacks. So it gave you a chance to get out and also another chance to enter the trade to take it, like to continue going with the prevailing trend. So it's just understanding like where price is likely to get hung up at and where price can possibly get to.
So basically super support and resistance.
Yeah, pretty much. And like even with this bearish setup right here, I know I was showing a lot of bullish setups. Price came through here. It came through with strength. It pulled back exactly to this level. It just so happened to be a fair value gap here, but it never came back to zero. And it's a high probability that it's going to flush lower than the 61.8 if it doesn't close back into the zero. Yeah, it's more levels down here, but after this, that's an amazing trade. If you done caught all of this, you shouldn't be looking for too much more unless you swinging. Like that's a whole day's worth of trading. So you could have literally got in if you was able to get in from the low. It's possible. Sebastian is good at getting in highs and lows. Al, there's a lot of people in here that's been trading already that understand trading at the highs and lows. Trav, I know Marvelous been working with it. A lot of people. It's no different than finding an absolute high or low and you waiting. You got multiple candles playing down at the low. You never had to worry about it. And just having this fib, you will understand where it's likely for price to have trouble. It got to the 50%. It went below the 50%, came back above the 50%, went below the 50%, tested the 50% as resistance. And then it continued to go with this trend. It got to the 0%, same thing, broke it, came back as resistance twice, then it continued. Got to the next level, this negative 27, it broke it immediately and flushed down to the 61.8. And then what it did, it wicked at this level before it came back one level to test it as resistance. And then it continued. But at this point, this was just reversal structure. It's starting to come back the other way. And then you can see that these levels is still valid when you bring it over here. Like when it's coming back up, it's still wicking out these same levels. So you just when you got a real range, you can use this particular fib to help you identify key levels where a price is likely to either reject, get hung up, or stop in a particular way to where it may not be, flushing or rallying price action.
Hey, Joe, I know as far as, everybody's trying to figure out what the range to set your high and low when you do the fib. For you, would it be better do you use it to the point where you find out where your chart is or break a structure and use it from that high and low after the break of structure, after it has a pullback, or once it makes a break of structure, you start to go from there on? I guess I would need to be.
Well,
I don't.
yeah, I can see what you're saying. So, for example, like
Yeah.
I could validate that with this right here. Like I could use this breaker structure as my low, and then I could use this as my high, and then I could see this is the overall high right here. Well, let me double check. Since it's so close, this would be the same high. But you can see, yeah, because remember, some of this price action wouldn't be happening at a particular time. So yeah, my breaker structure would be right here. So I use the overall high because it's inside this overall. This is the internal high. This is the external high, which only is like $5 or so higher. And then I bring it down to this breaker structure, which would be my previous floor before it broke. And then look what happened. Came to the level, gave it trouble. Came back, then it came down. It sat on this level perfectly as support.
Yo, I just got excited. Excuse me, Mr. Joseph. Do y'all see that? That I do this with my eyes, right? This is a computer that's running the market. Only computers work in absolutes. Look at all those lines and how they absolutely touch every single level.
You gotta have the correct dealing range. Sebastian, this joint gave me chills and had me so excited too. Cause like you said, I do it with my eyes. Now I found a tool to validate this joint for me. It's bananas. But you gotta have the correct high and low. Like, yes, you're gonna still have, if I just was to go take a fib and go high and low, yeah, I'm gonna still have levels here, but it doesn't mean that my levels is gonna be valid.
Yeah. See, I get all mines off the floor and work backwards. So I have the same levels like randomly drawn out on my screen, and you guys will see me moving those blue lines. I don't use fib, but I'm doing the same thing with my eyes, basically.
And then I could show you too on the lower time frame. Like I know I was just showing on the higher time frame for the scalpers. I could show you like this is bananas. Like I fell in love with this, and because I'm a scalper, like Sebastian said, most of my trades I'm only in them for like 20 seconds, 30 seconds maybe. I might have one I'm holding for a minute or two, but that's just because it's flushing and I had, minimum things going against me. So with this right here,
I have a question, guys. With the fib retracement for the scalping, are you using the 15 minute?
One.
You're using the 1 minute for scalping. And then for the
Yeah.
one that you just showed us, did you use the 4 hours in order to draw out those lines? I mean, for the fib retracement, did you do the high and lows on the 4 hour? What
It
did
depends
you
on what type
use?
of trading you're going to do, because that's what I'm explaining as well. The fib, this fib, and any fib is valid on any time frame, but it depends on what type of move you're looking for. So I could take this to the 1 minute, the 2 minute, the 4 hour, the 8 hour, the 4 day, the weekly. And I use them on the weekly. Like I could just show you a quick example on the weekly chart. This is the chart that I trade on. I got a weekly range right here. This is my weekly range, and I'm understanding where the price is at on the higher time frame, but overall, I'm taking smaller fibs on the smaller time frame to get my scalps in. But I still want to know what's going on in the higher time frame, because even though I'm not doing higher frame trading, the higher time frame still rules what's happening on the lower time frame. So I'm always going to be aware of what's happening on the higher time frame, regardless if I'm swinging or not.
And you're using that for which one? Are you using it for ES? I see M and Q here.
It's I'm using it for I only trade NQ, ES, and gold, but I've been mainly trading ES. NQ lately.
NQ, okay.
But it works on every ticker. Like this fib is not one ticker biased or for one particular ticker. I can go on ES and show you the same thing, just finding the higher and low.
Okay. Now for it, finding the high and the low, you're not doing leaps, right? Because you're doing futures. You said you're scalping. So If you're using the 4 hour, you're using the 4 hour for which timeline?
If I'm swing trading, I'm worrying about the 4 hour. So this is a
Ah,
real
okay.
quick. This is a 1 minute range on ES. You can see that even though it took some time, when it got here, this is the level that it pretty much stopped at before it started to turn around or consolidate. Because this is 1 minute. It's tradable, but it's pretty much in the range right here. This is building up bearish structure, but the whole time it came back, retested the OTE, went up above zero, got to this level, came back to this level, pulled back, came back to this level, pulled back to the zero, and went all the way up to OTE.
Okay, this is great. And what's the name of this fib retracement?
I really don't even know. I just called it OTE with targets. So I know that I'm targeting, and it's like the optimal trade entry as what Davon teaches us, but I just called it OTE with targets. So in the levels for this fib is right here. It's 0, the 0.62, the 1, negative 0.618, 0.5, 0.79, and negative 0.27.
Thank you. I got in
So,
late, so that's why I'm asking questions. Thank you.
No problem.
so in your opinion, why do scalpers use the 1 minute so that they can know?
Because it gets you first to the action, and also you're not late to the party. You get the best possible entry with the smallest possible stop loss.
Absolutely. And something to add to that, ma'am, you just asked a question. The reason that we do when we do scalping, we do the 1 minute is because the reality of every stock's moves is they move in 15-minute increments. That's why people love the 15-minute candles. Notice how from 3 o'clock in the morning to 3:15, that's one move. 3 o'clock in the morning, 3:15, he gets to the top, it stops. 3:15, it starts going down again, changes the directions. At what is that, 3:20, 3:30? Almost at 3:30,
329, it hits the low, then it
goes
starts
right
turning
back up.
around at 330.
So you get a full 1 hour move, but there's 4 parts to that move in the hour. So we can
Different
scalp
legs.
each piece.
Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. And it's building bearish structure. I meant bullish structure. Sorry about that. It's building bullish price action. Higher highs and higher
Different
lows.
levels. Yep, you got your levels.
And
just having that high, just having this high right here and this low gave you an indication of where price is going to be building levels at.
yep.
Remember, when you had this high and this low, this is only from 2:30 to 3 o'clock. So it's a 30-minute where you had this. This would have not happened yet, but it would have gave you indication of where price was going. And it gave you multiple entries. When you missed this, it pulled back 50% for you. A little bit more. This overall move is 50%, a little bit more than 50%, but it pulled back to the 50% retracement and gave you another opportunity to get in with also a fair value gap right here. Like Davon said, it's a promissory note with price saying it will be back. And it came back and gave you a chance to get in. You didn't have all of this, but it gave you all of this.
Yeah.
Our thing is we just like we gotta wait for that. We be trying to get in up there when you like you said before it pull back, and we don't want to wait till it get back to that area. Like we just impatient as crap.
Exactly. And another thing I want to point out too, when it's in the middle, you see a lot of these wicks in the middle. This is chop action. This is the 1 minute candles.
Yeah.
So if you get in down here, you ain't got to worry about. Hold on, let me see where's it at. You don't have to worry about price coming back down here to take you out, because down here, this is where the buyers is buying the price up at. So you ain't got to worry about it coming down here. If something coming down here, you probably got the wrong direction. Yeah. So in here, you got to wait for, if you getting in here, you dealing with price going up, down, up, down, up, down, up, down. You're going to have an anxiety attack because you're going to be in profits, out of profit, in profit, out of profit. Up big, down big. Little bit of profits, down big. Break even, down big. You don't want to deal with that. You want a smooth trade. So even if you got in here, none of this would bother you. If you got in here, none of this whipping would bother you because you're safe and you're protected down here. By the time it got to this level, you can start, securing you profits. Some people would secure profits a little bit sooner, but you can secure profits or close out the trade. In futures, this is a phenomenal trade. You can have as much as you want, but at this time, somebody is satisfied with what the market gave them with this.
One contract is a lot of money right there.
Hey Joe, is it possible? Do you know that I don't know how to do it? That's why I'm asking you. I know it would work. Like doing the back testing, like can't do you know how to I know Davon does it where you erase all that and just I forgot what he calls it in trading view.
Oh, the
And you
bar
can
Replay
show
replay.
them
trading.
the bar replay, yeah, and show them how effective what you're doing is, you know, what you're doing and showing how you base the high and low.
Okay. You want the same range right here?
Yeah, well, okay, that's the range you got. Okay,
Hey,
yeah, I would have showed a different. Go ahead, yeah, use that range right there. It's perfect.
Okay.
oh, love it. This is why I get up every day at 2:30 in the morning, guys.
So
This
once we
play right
seen
here.
this low get hit, like Sebastian said, this is a 1 minute candle. If I seen this happen and this price just stop like this and it's a demand zone, I'm not gonna go crazy. I'll put 2 contracts on, and then my stop loss will be below this low. So I'm risking.
Mhm.
Damn, sorry about that. Hold on, I put my TP down there. I don't want to have too many arrows up there. So once I seen this, like I said, I would have put my contracts on. I'm putting my stop loss down here. Oh my goodness, why is it doing this? 1 second, I'm gonna try this one last time. Oh, that's why. I apologize. I know what's going on. My bad, Joe. So once that happened, I was pressing the wrong button. Apologies. My stop loss would be below the low. And based off these levels, you got target 1, target 2. This would be a target because it's a fair value gap, bearish, so you can see price get hung up. But we know this is the top of the range. So you can target the top of the range, but as Davon always teaches, go for your low-hanging fruit. Get comfortable with this and then this
That's
before
my
you start
trade.
going for this. So at that point, you just let the price play out.
A key is you can get that red line almost 100 times out of 100. It's harder to
Almost
get the
100
top line.
times. You're always going to get to that 50%. Without price doesn't have to go above the 50%, but it will get there and it can turn around. And it literally from 3 to 310, 10 minutes of price action with minimum pull down because you got in at a key level. You got in at a bottom. You don't have to get in the middle because when this happened, yeah, it gave you a chance, but like you said, it can get to this 50% and reverse. It don't have to just keep flushing or keep rallying up. And then like being aware of what happened, say you missed that play, you got a high probability fair value gap right here in the 50%. So bullish fair value gap. If price come back here, you can take it back up. Yeah, you could be like, oh, it's counter trend. I could take it back down. But the prevailing trend is bullish. The prevailing trend is bullish right now. So when it pushed up, you just waiting for price to revisit this promissory area, this fair value gap.
That answers Miss Lawanda's question actually of where I would get out. He's showing you exactly where to get out right now. You take it from the floor, you get out at the resistance level.
Yeah, these are just previous targets, but you want to see if I got it at the floor, this was my high before any of this. So this giving you a clean trade right here. You want to go from floor to ceiling or ceiling to floor. If it continues to rally, then you can target this stuff. But you have to confirm that it's using your ceiling as a floor now.
Yep.
And then you see it started fiddling with the ceiling, like Chris said. Just because it shot above the ceiling, that don't mean that it's going to be safe up there. I mean, come back down. It tested it out twice, then it fell back down. Now we getting reaction to our fair value gap, and then you want to see if it pushes down in there. At that point, we got the bottom of the fair value gap, and we sitting on the 50%. It may be worth another try. You put your stop loss below the lows, preferably where your play would be safe without it being invalid. I can stomach $250 or $225. Now I want to target my highs again, the same highs, or you could target the highs that it left. These pretty much have similar highs. Like the high of the candle with the wick is the same as the close of this candle, so you can target right there. Now you're waiting for price to go your way. It ain't even gonna take long because it came back.
Paid him
Split it.
again.
Two
Beautiful.
plays in a row. All of the same play. This play allowed this play to happen because of the imbalances that this play left behind. If you understand that and can wait.
Boy, I love you, man. I love you, dude. That was awesome. I do that. That's what I do every day. Just wait.
And it's just simple. The hardest part you're going to see is, can you make money on these every candle? Absolutely. But is it safe money? No. Because if you're not getting at a key level, price doesn't have to continue doing what you think it's going to do. Or you're not in a safe enough place for price to keep you whole enough. Some people ain't in a position to stay solvent in these plays where it might put you in heavy drawdown. And options, you might not have enough liquidity in your account. You might not be whole enough. It might not be something that you want to lose. In futures, your account might not have enough equity on it to where it'll liquidate you. So you got to just take the money, take the easy money, and get out of there.
But look at how much money he made and look at how much money he risked. He only risked $500 total. He made $2,100 in 2 trades. And you got a lot of people ask me how I did what I did. I did exactly what he just did, what he just showed you guys. And I just rinse and repeat that strategy every single day. I love that, man. That was awesome.
No problem.
Hey, I was going to comment on that. I don't know if probably not trying to be a negative one. I know a lot of people, which are probably going to have the hardest part, what you have to master or try to figure out. And I kind of somewhat do, and I'm still struggling with it, figuring out the right highs and lows. Once you figure that out, this fib it can be golden. And that's what you gotta figure out. Hey Cedric, my thing is, man, we need to find a time we could probably set up a Zoom. Or if Chris find a time we could go over Fibonacci and can show you guys how to do it on Thinkorswim and also on TradingView.
So I'm gonna go on the higher time frame because a lot of people were just asking about the higher time frame. I'm gonna find the higher time frame range for y'all and just show you how it would work. So boom, you got this high right here. Let me see. I need to be on the higher time frame. Let me make sure that it's good. Okay.
Well, you can
So
teach
you got this high right here and this low right here. And I could confirm that with this. See how I got a quick little indicator. I don't need the indicator. You see how I said this before I turned the indicator on? I don't need the indicator. You want to be the same way to where you're not dependent on the indicator, you're using it as a confirmation. I just double check it. I see where my highs and lows are, and then I just confirmed it. Extreme high, extreme low. And it's kind of, I can possibly use this one, but this one is the range that I'm working with right here. So this is a 4-hour range. And it's going into current price action. This is all-time highs right here. So when you look at this range, you see it came off the all-time highs. It came down to the 50%, came back. These is bigger candles. These are 4-hour candles. So when you see price on a 4-hour or higher time frame, you're not looking for it to come right back immediately. You're looking for it to play out through a higher time frame. So it came below the 50%, came back. What was in between the 50% and the 61.8? A fair value gap. By it taking these highs, it created a demand zone, supply zone. Sorry about that, which is an order block. It came down all the way to what level? The level that I'm showing you guys. Oh my goodness, the 27. This would, this level and this level, you would have had this. This would not have happened yet. All of this price action would not have happened yet. So you could have took this from the all-time high. This low would have been there, and you was waiting for it to create a high. So it created the high at these all times. So sorry about that. So now you just was waiting for structure to tell you what it wanted to do. So after it came from this optimum trade entry, this golden pocket, it came down to this level right here. It pulled back to a gap. Yeah, I love the gaps. Chris just told y'all, identify the gaps. This is a bearish fair value gap. Even though the candle not there, it gapped down, it's a bearish. Whatever direction the gap is going, that's the type of fair value gap it is. This is a bearish fair value gap. So it came back, took these levels, made another supply zone, and it flushed down. Where did it get hung up at again? That same 27 level. Then it continued. It didn't even come back to really retest it, but these levels are zones, not necessarily aligned. These are zones. So it didn't really come back to test it, but it got close enough. Came back, got hung up on the negative OTE. It came right back, used it as resistance, and then it continued to flush. With this fib, if it doesn't close back above 0, it's a high probability that it's going to go below the negative 61.8. And I can show you off a back test after back test from different range. If it doesn't close back inside here or start coming back in between your range between 0 and 100, it's a high probability that it's going to keep going lower. And if a bullish setup, if it, with the opposite side, if it doesn't close back in between 100 and 0 your range, it's a high probability that it's going to keep going higher. And it's the same thing. And you can take your levels to see how it reacted over here. It literally came back to OTE, which is the golden pocket. This is current price action from the same range from over here. This range started July to the all-time highs, from July 2nd to July 16th. That range is still valid right now, and it's playing out right now. This is a 4-hour range. So for the person that asked me about the higher time frame, yes, I'm always aware of what's happening on the higher time frame, and I would do this on my own chart. I actually got ranges like that up here. It's just a different fib. I can apply that same fib to this right here. It's essentially the same thing. You see it say July 15th. It's just NQ and not SPY.